Welcome to a well-designed home podcast. I'm your host, Melissa Brunk, Principal Interior Designer at Timeless Designs by Melissa. We are a premier, full-service interior design studio serving Sioux Falls, South Dakota, the Iowa Great Lakes, Mankato, and Rochester, Minnesota. Our mission is to create enduring, bespoke homes that celebrate a life well lived. With over 20 years of industry experience, we craft personal havens where every detail reflects the essence of your family, evoking feelings of joy, belonging, and pure delight. Join us as we transform the building and remodeling industry, one home at a time, because there's no place like your home. Welcome to today's podcast, A Well-Designed Home. We are here with Kyle from Plains Commerce Bank, and today we're talking all things banking and mortgage. So, Kyle,
Awesome.
Who are you?
Thanks for having me. I'm a mortgage loan officer at Plains Commerce. I've been there for just a little over 14 years now. So been a loan officer from day one. So I've kind of got to help a lot of people throughout the years and on the journey of home ownership, and now into the fun part of like their second and third homes for a lot of them. So,
Oh, that's fun.
yeah. So something new every day. You never know what to expect. So.
Right. So do you, on the mortgage side, do you help them with land purchases also, or is it just the homes?
Yeah, we can do everything. So if it's a purchase, refinance, buying a lot that they want to build on, the construction loan, if it
Nice.
involves anything residential, we're pretty much all in on it.
So no commercial.
Yep, just no commercial. We have other people in the bank that do those. Just
Nice.
for me, it's all residential.
Okay. And so what is your big goal for this year?
So my biggest goal for this year is to help 225 families get into houses. Last year we did right at about 190. So want to
Okay.
up it by a little over 10% for it. So the
Yeah.
big stretch goal is 225 families to help out.
Yeah. That's a good goal. So I know for building and remodeling, that's typically a big spring season. So do you see most of your mortgages in certain times of the year, or is it sprinkled throughout?
It's so our busiest times are obviously April, May, June, just because nobody wants to move in February. But it's kind of busy all of the time because like right now, and I always say this like to any person that's looking at buying a house, it's always better to get started too soon than too late.
Right.
Just because by the time you find the house and you see it, if you're not pre-approved, especially come summertime, you're going to miss out on that house, and then you're going to have the heartbreak of it, and then you're going to get discouraged, and you're not going to want to buy because you lost out on the one
Yeah.
just because you didn't have it ready. The cool part on how I do stuff is we do a soft credit pull to start with. So that way there's no hard inquiry. We can make sure everything's in line, and then when we find the right house, do the hard inquiry at that point. But we get to have everything ready to rock and roll, and
Sure.
it's even if you're thinking like 6-7 months out, we can get it done and just make sure everything's done at that point for it.
Okay.
And we have the budgets dialed in. I'm huge on the budget side of things. Like a lot of people, when they go into the office somewhere, they're like, "Oh, you qualify for 400,000." Well, if you only want your payments to be at 250,000 or 300,000. So I'm really, really budget oriented on focusing on where people want their payments to come in at, and then we
Sure.
expand from there for where they're looking at on it.
Yeah, that makes sense because just because you're pre-approved for X amount, that doesn't mean that you should do that.
Exactly, because I don't want to set them up for failure. They got to be comfortable with making that payment for everything. So we never want to set them up to fail. Like that's one of the biggest things that we'll always abide by.
Yeah.
And like when we're pre-qualifying everything, and again, it's so kind of crazy in our world of, yeah, we are one of the most heavily regulated industries in the world, but it's also one of the biggest bait and switch industries in the world because there's so many ways you can set up a loan. And when you're going through the pre-qual on part of it, somebody could say, "Oh, your insurance is gonna come in at $100 a month to make their payments look better at the pre-qual stage."
Uh,
And then when they go under contract, the taxes magically come in higher, and then their insurance comes in double of what they were
oh
quoting
no.
it because they wanted their payments to look better when the people were getting pre-qualified, so they went with that person.
Oh,
And then they go under contract and they find out their payments are higher. So that's one thing, like, when we're going through, where I always tell people, like, every single one of my numbers is gonna come in better than what we're talking about today, because you like me better if the payments come in better versus vice versa.
right.
You get into your
They're
house.
worse. Oh
Um,
no.
a crazy concept, but I sleep great at night with it, so it's kinda
That's
cool.
good.
So it's just taking care of the people the right way and
Yeah.
doing business the right way is really what I try and do.
Yeah. So in that pre-qualification portion of what you're doing, what does that look like? How long does that take?
It varies per person. Just because if somebody's self-employed, there's a little bit more work that we have to do, or if they're commission income. But the first step of everything is to run through an application, where you get all their basic info like name, social, date of birth, where they work, how long they've been there.
Mhm.
If it's somebody that's a straight salary and we get their pay stubs, I could do a pre-qual letter in an hour.
Okay.
Now, if it's a self-employed person, then we have to go through their taxes for the last 2 years, make sure they have everything, and then it's really on how fast they get us the info.
Sure.
If they get me the info right away, we could get that person done really fast as well.
Okay.
But it's all on how fast the individual gets us the
So it's
docs.
not really like weeks of time waiting to get anything back. It's just you getting those things and getting them like
Yep.
ran through your system.
Exactly. So yeah, that's always there's definitely shouldn't take weeks unless they have credit stuff that we're working on. Because there's some pretty creative things we can do on the credit side to get their credit scores up if they're too low. That
Mhm.
can take some time for things, but if it's a straightforward one, it's just how fast people get it to us.
Okay.
Which we have a cool system where they can upload it to. So I mean, it's a couple clicks of the button and they can have everything over.
Okay. Have you ever ran someone's credit and found something that wasn't supposed to be there?
A couple of times, especially there's whether it's collections they forgot about.
Mm.
We've the kind of the crazier ones is there's some college friends of mine. They were twin sisters and their socials were very similar
Ah.
and their names were similar.
Oh boy.
And there was stuff on their credit report that was intermixed on there, which is crazy for it, but it
Uh-huh.
is possible for it. So that's why, I mean, when we do the soft pull, it still pulls everything through and I walk them through line by line item what's on their credit.
Sure.
Just because nobody ever walks people through credit. Like, that's the one thing I've kind of learned in 14 years. It's like, gosh, no one ever teaches enough about credit reports and credit, especially when you're growing up, on what to do and what not to do.
Mhm.
Like,
Okay, so what should we do?
so one thing is credit cards. In kind of the older generation, they hate credit cards and don't want to have credit cards open. And even some of the younger ones get scared of it too. Well, it's like 30% of your credit score is having a credit card open. And then
Mhm.
you're always taught to, okay, pay it when your bill due date is. Well, actually, you should pay it before that date, because when it reports to the credit bureau is when that statement cycles. And
Mhm.
if you're over 50% usage on that credit card, it actually dings your score.
Mm.
So you could have a younger person who has a $2,000 limit credit card, puts $1,500 on it per month because they put everything on there and they
Sure.
pay it off monthly. But if they wait till that statement cycles,
Right.
it's going to hurt their credit score, rather than if they pay it off before the statement cycles, it'll
Mm.
help their credit
Good
score.
point.
So that's and that's a way that we can help people get their credit scores up. And that's what we look through is like, okay, if we pay down this card, your score could go up 20, 30 points. And that could get them to qualify into a better loan program, or even just to get them to qualify in general.
And so that the different programs also determines like what their interest rate is, correct?
Yep. Yeah. Because the interest rates vary per program and by your credit score. So a lot of the government backed programs, as long as you're above 620 credit score, you're going to get the same rate that you're there. With a conventional loan program, it's all off of your credit score. So the
Mm.
lower your credit score is on a conventional loan, the higher your interest rate is, the higher
Sure.
your mortgage insurance is. So that's where it's being really good and working with the credit side of things can get people into a better loan and save them money in the long run.
Okay. So you've been doing this for 14 years. What are the difficult things that you've seen come and go? Or like, we'll talk about like presidency change, which we just had, but in the 14 years, how have you seen the housing market change?
I mean, in Sioux Falls, it's always been fairly steady. So I started June of 2011. And during the first really 4 or 5 years, it was refinances everything because rates had dropped, and it was
Mm.
refi,
Mm-hmm.
and you dabble in the purchase part of it. And then in like the end of the 2010s, like 2017, 2018, it was a lot more purchase heavy. And then 2020, 21, it was just mad crazy on everything. Refis, purchases. I mean, you're having to go in 20, 30,000 over asking on houses because
Yeah, that was
there's
wild.
8 different offers on the house. And even if you wanted it, you had to go way over. So then you had to get creative on that side of things. And then in end of 22, 23, rates go through the roof, and then you're just getting creative on, okay, how can we make these more affordable for somebody, with doing different types of buy downs and just getting more creative on the loan structure to save people money on that side.
Mm-hmm.
And said, you know what, because no one knows exactly what rates are going to do. They're traded on the bond market just like stocks are, so they go up and down. Um, do I think they're going to stay high forever? No. But so it's kind of structuring it to like, okay, how can we set it up to save you money when it does come time to refi?
Sure.
So it's kind of a two-part strategy right now. And that's like, so it's always changing on that part. Like, okay, what's our strategy going to be for this? What's the strategy going to be for this?
Hmm. What's the most creative you've had to be? Do you like have your clients write letters to the homeowners?
That's more
Does
on the
that
realtor side of
that's the
things. So
realtor.
that's like what we always do. I always call the listing agent when we
Uh-huh.
have so, and when they let me know they're putting in an offer on a house, I call the listing agent and tell them how good our clients are, just to put a step above the other offers because no
Sure.
other lender is probably calling that
Yeah, I like that.
realtor to put in a good word for their clients and be like, hey, we have everything verified. They're rock solid, and just reinforce the prequal letter.
Yeah. Yeah, because if you're doing that work on the front end where you are doing the taxes as they should be and planning everything out properly, then that's setting your clients up
Yep.
even better in
Yep.
that situation.
Yeah. And it's kind of joke around like we want to have a really boring business. We don't want to have exciting times in our world because if it's boring, everything's going smooth. If you're going up and all over the place and you're stressed out all the
Have
time,
there been exciting times?
yes, I mean you're always going to run into stuff. That's I always call it the good stress and bad stress. Because there's always going to be there's so many hands in the pot when it comes to getting a mortgage, whether it's I mean, the buyer's agent, the seller's agent, the sellers, the home inspector, the title
Mm.
company, the surveyor, the companies you work for. There's just so many hands in there. Something's gonna happen at some point. It's just what and how can we be ahead of it?
Yeah.
When and there then there's the bad stress of it, something where the bank missed it or you looked at their income wrong. So I always teach everyone on my team,
Oh.
it's like, okay, we have to be absolutely perfect on income, assets, and credit
Mhm.
because those are the three things that we have 100% control over when we're giving out a prequal letter. Like if I give
Sure.
out a prequal letter, we're gonna close if it's something unless it's something out of our control. Now you can have stuff come up on title work like a judgment or appraisal comes in low and stuff that you can't control, and that's the good stress because you're coming in to be Mr. Fix It.
Okay.
So that's where I always call it the good stress, bad stress of it.
So on the Mr. Fix It, what do you do in those situations?
Just communicate really good. There's not a whole lot like you can do to like, oh, we're just gonna do this and this and make it right. Well, if there's a judgment, the people have to pay it off, but it's just the faster you can get everybody in the loop
Mhm.
and figure out ways, okay, can they get a gift from a family member to help pay it off?
So
Just
that would be like in the circumstance where they have the appraisal and it's not matching what they want? Or
so
what would you do in that?
judgment would be is if they had like a collection that was filed down at the county.
Yep.
Same thing could be with the appraisal. If the appraisal came in low, we can go back, renegotiate with the sellers. It basically kind of opens up a new negotiation period for it. But it's all on just speed and getting everybody communicated and getting everybody on the same page so that way we can all find the answer on how to fix it.
Mm-hmm.
Whether like with the appraisal's low, we can get better comparables to send to the appraiser to have them do a second look at it.
Okay.
But it's just not being afraid to make that phone call. There's a lot of people that are afraid to, like, not conflict, but they're afraid to bring up an issue because they think it's on them, when it's like everyone's here just to fix it. Like, we're trying to get somebody into a house and get them into their
Exactly.
dream home. It's all hands on deck to get it done.
Yeah. Okay, so we have a new president. How does that change the mortgage industry?
TBD. We just, we're in the feeling out period right now. He's came out and said that he wants low interest rates. He said that multiple times. Now the big part right now is, like, we just had an inflation report come out this morning, the consumer price index, and the expectation of it was to come in at 2.9%, and it came in at 3%. So it came in a little bit higher than what they were expecting, which caused mortgage rates to get a little bit worse this morning.
By a little bit, how much does that mean?
I think it was like 1/8 of a point difference this morning. Nothing crazy.
Sure.
But we're in a weird part right now because it's the feeling out period with the new president and nobody has the right or wrong answer for what it's going to be here. Is what are his tariffs? Is he going to do tariffs? Are they just going to be a negotiating tactic? Are they going to cause inflation to go up? So everyone's trying to figure out what's that going to cause. But he's came out and said that he wants lower rates, whether he goes around the Fed to get lower rates or if the Fed helps get lower rates. That's where I think we're in the last little hurdle of it, is the Fed does need to drop rates down to get the housing costs down, which will help inflation come down the last little leg. But it's all kind of tied between those inflation reports and the job reports.
So one thing is tied to another.
Yep.
Yeah.
Yep. And it's kind of where, in my opinion, I think once they start dropping that, that's going to help the mortgage rates come down and help house costs come down for the payments on that side. The catch-22 part of that is when rates come down, it was like if rates go down 1%, 5 million more home buyers hit the market. Well, when that happens, prices are going to go up and we're going to be right at the same spot for affordability. So it's the catch-22 part on that. And that's where, like, nobody has the right answer for it, but it'll be kind of curious to see how it all plays out. Like, the next 6 months are going to be kind of crazy in our world, just to see what happens.
Nice.
So
as someone is, we'll say, building a house, what sort of things do they need to have or prepare for or get ready when they're coming to see you?
So it depends on the in-person for it. The biggest thing that we always do is, okay, do you have a builder lined up? Like, that's going to be one of the big questions there, because when you're doing a new construction, there's two ways you can do it. The builder carries the construction loan or the person is carrying the construction
Which
loan.
one is more common? Or is it 50-50?
It depends on the price point. If it's under probably $750,000, the builder does a lot of the times. And if it's over $750,000, the borrower does a lot of times.
Okay.
And the reason why that is because the builder doesn't want to take on the risk of building a custom home and then something happens.
Sure.
And the loan is in their name and then they're stuck with the house and nothing good happens from that part. Where if it's under a 750 house, it's still a really, really nice house, but it's just easier to get moved if something were to happen.
Sure.
Like, that's where you see, like, the Kelly Nielsen's, the Doug Allen's, the Empire, Signature, they carry 100% of everything. But you get into the, like, Ben Harvey per se, Jared Smart, Deffenbaugh, those upper end ones, they don't hardly carry any of their construction loans just because they're a lot more custom to that individual. They don't want to get stuck with 100% custom home and then be stuck with it. So it just depends on the builder route that they go with.
Sure.
So if they're carrying the construction, like if the borrower is carrying the construction loan, then depends on when they come in to meet with us. I always like to get, again, started too soon than too late with, okay, let's start kicking around budgets on what you can afford for the price points. then go out, meet with your builders, and get the bid specs and plans for everything on what you're gonna build,
Mhm.
and then we do what's called a subject to completion appraisal off of those plans,
Okay.
and that's where before we get started really on anything construction loan side, we get that done to make sure value is there.
So on that plan, what is the most helpful thing? So is it having if you have just the allocations for each thing from the builder, or is it having specifics? What makes that piece of the puzzle much better?
Works out about the same.
Okay.
If they have the allocations and they have it dialed in pretty good, it works compared to like getting 100% good bids on your bid specs and plans is hard because it's tough to get subs to get all the bids back in on time for when
Uh-huh.
you're going. So it just depends on how far out you're planning on building.
Sure.
Like if you're thinking you're going to build next year, you're going to have a lot more dialed in bids than if you were hoping to break ground in 3 months.
Right.
So it just kind of depends. And it, again, preach it to the choir. It's always better to get started too soon than too late for it because the longer you plan out, the more dialed in you're going to be and you're going to have less surprises
Sure.
because no new construction goes on budget. You're always going to be 5 to 15% over your budgeted cost just because you're going to be going and you're going to get, speaking from experience, you're going to be planning the house and you're going to pick out stuff and you're like, oh, that looks cool. We want that. We don't want to skimp on that part. Well,
But
there
what's
goes.
allocated? Not that.
Yeah.
Right.
And that's where, like, with the custom ones, it's a lot easier to go over than if you're doing like use for say a Nielsen one
Mhm.
because when the builder carries it, they'll say, hey, we have $5,000 allocated for carpet at carpet one. You go to carpet one and they'll
These
say,
are your choices.
yeah, here's your choices that you can do to fit in that budget. So it's a lot easier to stay on budget with those ones.
Sure. So that contingency, is that something that the mortgage company carries? Is that something the builder carries, or the homeowner should just be aware that they need to have an extra 15%?
It's onto the homeowner because it's the hard part is all of those bills come in at the end. So you're racking up these
Yes.
overage. So it's the better you can communicate with your builder and everybody on it, on what your bills are coming in at.
Mhm.
Like I had a spreadsheet that I did when we were doing ours on it. So we kind of knew, but it's still going to come in at the last minute. So you always want to plan for that contingency just in the back of your head for it.
Yeah. Yeah. Good. Okay. What happens if someone is maybe moving to the area or they have something changing in their life? Does that affect their mortgage, like a new job or whatever it might be?
Yes and no. If the new, so I love having and it's happened more and more lately than before, especially for people moving into Sioux Falls that aren't from here.
Mhm.
As long as they have an employment letter that has a start date and no contingencies on it, we
Mhm.
can use that before they even start their job.
Okay.
And there's some time frames we have to worry about on that part of it, but so we can actually have a move in here before they start. We can use that income to help qualify. And what I like to do is have them actually sign where they're coming from. So, it's kind of cool. I know a lot of college coaches that I've learned or known over the years. And I have one that's actually moving from Washington to Michigan right now. So cool part on ours is I can
Hmm.
lend in all 50 states too.
Oh,
Is
nice.
so I have a friend that's actually moving from Washington to Central Michigan, and I'm having him sign in Washington so that way when they go over to Michigan, they can move straight into the house. They
Nice.
don't have to get an Airbnb lined up for the week or get a hotel and have all their stuff sitting in the
The
parking
movers
lot.
can just take their stuff to
There's
the
right
house.
in. Yeah.
Yeah.
So we've done that probably a dozen times a year where there's somebody's moving in from out of state into Sioux Falls and we have them sign wherever they're moving from so that way they can get right into the house. They don't have to
Hmm.
try and coordinate all that. It just makes it so much smoother and easier on it. So it's
Yeah. I can see how that would be super beneficial.
yeah. So it's kind of like the cool part on ours that kind of sidetracks. Like we get the sales part of it because we're going over everything, but then it's a project manager too
Uh-huh.
of you're managing the entire process and making sure everything lines up on it. And that's kind of the fun part. You just never know what's going to happen or when it's going to happen.
Hmm. So those out of state um, deals that you're doing, how is that different than if it's just right here locally? Is there anything different?
Not really. It's pretty much all the same. Then I have with those out of state ones, we just do everything on video conference. And I share my screen with them. They see all the numbers. That's really the only difference is it's just virtual for those ones. Where if it's in Sioux Falls, I still like to have everybody come into the office. I'm old school. Even if it's a 20-minute appointment, if you're going over everything face to face, they can see the numbers, put a face to the name. I won't do anything just over the phone. It's not how I work.
Yeah. Nice. All right. Is there anything else we need to chat about we haven't touched on?
Biggest thing, and I've preached to the choir, if you're ever thinking about buying, building, get started too soon. It saves you stress, saves everybody stress.
So if somebody was, like maybe it's 2 years out, they're working on this, grand plan of building or a huge renovation to their home. Is there a too soon or not too soon?
I wouldn't say there's ever a too soon.
Okay.
I mean, if somebody was 2 years out and they're planning a great big build, come talk in. Yeah, interest rates are going to be completely different 2 years down the line, but at least we can talk budgets and go over everything because little tweaks on a big house can save money on that side, or it saves stress on that side. We can just dial everything in better.
Sure.
So it's always just better too soon. Just because the worst thing that happens is we have somebody come in again and re-go over it, and it's just a refresher. But then they know exactly where it's going to come in at.
Sure.
Especially on the build side of things. Like, building is stressful. Like, it is very, very stressful. They always say...
You're sure about that?
They always say, if you make it through your marriage going through a new construction house, you're going to be fine for the rest of your life. It's the more time that you have to go through everything on that side, the better it's going to be going through the process, the better it's going to be when you're going through the build.
So what was the most stressful or hardest point for you when you were building your house? What made it so difficult?
I would say it was a lot of difficult. It was just a lot of meetings for going over stuff. And that's where, in my world, it's like I get pulled away from work and it's like, all right, I need to get back to work.
Yeah.
So it's the time was probably my biggest stressor.
Sure.
And then you're getting towards the end and new construction, nothing is hardly ever on time. So then it's like, okay, we just want to get it done. Like, what?
Just want to be in there.
We just want to get in, especially on ours because my wife was pregnant, and we moved into the house on Halloween and had our baby on November 24th. So we were literally in the house for 30 days for it. So that was probably the stressor. It was just getting settled.
Yeah, and I'm sure for her being pregnant, like this sometimes could happen at any moment. You could be 2 weeks early, and so you just want to have everything. You want to do the is it nesting?
Yep. Yeah. Get the baby's room ready. Get everything organized where it's going to be at. Yep.
Yeah. Yeah.
So, yeah, that was the part. It was probably like, we just want to get in and get settled and get a breath of fresh air. So.
Yeah. All right.
There is a lot of moving parts.
Anything else?
That's a lot of it. So.
Okay. Well, thanks for coming to the podcast.
Thanks for having me.
Yeah.
Appreciate it.
Thanks, Kyle.
Yep.
Oh, yeah. Yeah, so where can we find you?
So my office is at 3905 West 49th Street, 49th and Louise. And then I have a website. It's applywithkyle.com.
Okay.
So pretty straightforward on that one. And then for refinances too, I actually came up with a thing. It's called Plains Commerce Rate Watch. So that way, if somebody did buy a house in the last 2.5, 3 years, I watch the rates for them. So that's one thing with all of my past clients. I track everything. So I have 14 years worth of loans that I track. So if it makes sense for somebody to refi, I reach out and let them know. So that way they don't have to worry about what the market's doing.
That is amazing service.
Yeah. So that way we're a step ahead on it, or a step ahead of the game on it. And so I came up with, it's plainscommerceratewatch.com. And that way they can put their info in. I can track it for them, just because what's going to happen when the rates do drop is their mortgage people, or another one is a lot of mortgage people aren't in the business anymore. It was like, I don't know the exact number. I know it was like 300,000-ish, 400,000 people were registered to do loans in like 2021. And I think we're down to like 75,000 now. So their mortgage person might not even be in the game anymore to try and watch their rate for them. Yeah. So that's something where even if I didn't do their loan, they can go to that website. I can track it for them. We'll reach out to them when it makes sense to do something when rates do come down.
Wow, that's pretty awesome.
Yeah, so we just got that rolling. It took me like 7 months to get it through the compliance world.
Nice.
But we got that rolling at the end of last year. So
Nice. I was going to ask you too. So when COVID was a thing and the whole world shut down, how did that affect mortgages? Did it at all? Are things different now than what they were before that?
it made everyone realize it's not as hard as what it needs to be. Would probably be the way to do it.
The red tape was lifted?
No, I wouldn't say as much on that side. If anything, I'd say there's more red tape now than what there was then, just because everybody's a little bit more nitpicky. But it is as far as like doing video conferences and doing that. And I did a lot of video conferences with people moving into the area from outside of town. Where a lot of people just did it on the phone, and it's like, I'm going to do a video conference anyway. But it's like, okay, if you have somebody in Sioux Falls that's buying and they just can't come into the office, it's like, hey, let's do a video conference at 8:00 at night and just do it then. It makes it a lot easier so they don't have to come into the office. Like, I'll do a video conference at 8:00 at night to get somebody pre-approved. Like it.
Well, yeah, because depending on where they live and what their schedule is, that might be their only available time.
Yep. So it's just a lot more flexible. Like I have an office at home, so I can pop downstairs, do the pre-qual appointment real quick, do it on Zoom. They get to see everything as if they were just in the office. With this goes a little bit farther back. Like back in like 2016, we would mail documents out to people and highlight where they need to sign. And this is like all of that. Well, now we have everything's e-sign and makes it back end a lot faster for things like we even e-sign the majority of our closing documents now to make it easier at closing. So that part of it has made it a lot easier just for the uploading. Like our upload system goes straight into our mortgage software. So it's just easier to organize the file and get stuff in, and it helps getting that pre-approval done faster.
Yeah. Nice. All right.
Yeah.
Sounds good. Thanks for coming in.
Yeah, thanks for having me.
Yeah.
Thank you for tuning into a Well-Designed Home podcast. We hope today's episode inspired you to take the next steps towards creating the home of your dreams. Don't forget to subscribe so you never miss an episode. New episodes are uploaded every Friday afternoon for your listening delight. We'd love it if you could leave us a 5-star review to help more listeners discover the show. And while you're at it, sign up for our newsletter at timelessdesignsbymelissa.com to have every episode and other design-related items delivered directly to your inbox. Looking for more resources? Download our complimentary guide, How to Hire the Right Interior Designer, on our website to ensure your next project is a success. Stay connected with us on social media. Follow Timeless Designs by Melissa on Instagram, Facebook, LinkedIn, and YouTube for behind-the-scenes content, design tips, and so much more. If you're ready to start your own design journey or have questions, reach out to us at concierge@timelessdesignsbymelissa.com. We'd love to hear from you. Thanks again for joining us on a Well-Designed Home podcast. Until next time, here's to making every space a timeless reflection of you.